How to start trading stocks when you don't know where to start. In this how-to series, this is exactly what I plan to talk about. If you're a brand new trader and you're new to the market and you just don't know where to start, but you're interested in trading, in this video I'm going to talk about 7 different steps we'll go over on what you can do to start one at a time. Welcome to the channel, everybody. My name is Mal. I'm a day trader. I enjoy looking at charts and I like helping people. This channel focuses on giving beginners information that I wish I had when I started. And one of the things I really struggled with when I started learning is I just didn't know where to start. There's lots of information on trading stocks and different strategies because different people trade stocks differently. But the challenge with that is it's hard to put all the information together step by step and figure out exactly what to do and where to start. So in this video, here's what we're going to be talking about. Let me get my text. So I'll start my box here. So number 1, learn to read candlesticks. That is going to be the very first thing, right? So I'm going to have 6 different steps or things that are very helpful to know in order to start trading. And the first one is learning to read candlesticks. If you're not sure how to read candlesticks, I have made a video talking briefly about that. So the idea here is in this new how-to series, the first video I'm going to go over the 6 things that you need to know to start trading stocks. Then in the following videos, I'm going to go over each one of those in much greater detail, and hopefully you have not only a good place to start trading, but also understand how to read candlesticks, how to read market direction, market structure, and so on. And this is what we're going to be talking about in this video. So learning to read a candlestick, learning to read the open, the close, the high and the low, as well as the body and the wick of the candle will tell you a lot about what that price is doing in that particular time. So like I said, I will link the video. If you have not seen the video on how to read a candlestick, check that out. It's probably a 5-minute video. And as this series continues, I will talk about how to read candlesticks in much greater detail. So that's the first step, learning to read candlesticks. Now, the second step is learning to read market direction. That is number 2. So to be a good trader, you need to understand, is the market bearish or is the market bullish? If you don't know those terms, bullish basically means we're uptrending. So bullish means that the market is going from the bottom left to the top right. This is bullish. And bearish means it's going from the top left to the bottom right. So looking at this chart of SQ, which is square, today, so far on the 1-minute chart, this would be considered bearish. Bearish means that for the most part, sellers are in control. And if you were to draw a line from the high to the low, the line is going down. So for the moment, we're bearish. All right, so I went ahead and deleted those lines. And I want to talk a little bit about market direction. As price moves, candlesticks tell you a story of where the price recently was and what it's currently doing. And what happens is when you get a set of candlesticks, when you learn to read candlesticks by themselves, they start to form patterns. And you can tell by these different patterns what's happening in the market. Learning to read market direction and building a bearish or bullish bias is very important. And an easy way to tell this is by using the 20-period moving average. And we'll talk more about this in the upcoming videos. I'll go over them in much greater detail. Okay. Number 3. Learn to read market structure. Market structure is very important. What I mean by market structure is support and resistance. By learning to read support and resistance, you can build a bias of where price is likely to have a bounce or potentially reverse. So looking at this chart here, let me move this over and I'm going to zoom in. So looking at this chart here, I can tell you that this area here is support. Now the line is off a little bit because it was drawn on a much higher time frame, but I would say that right here is a good line of support. This is market structure. And support is not necessarily a line as much as it is an area. So if I were to draw a box, I would draw something like this. And what you would notice is if we're looking for in areas of support where we could potentially trade this, we have a bounce here, which I've talked a lot about in my videos, and I'll go over in greater detail in the later videos. We have a bounce here. This basically shows rejection of lower prices at the time being, right? So we came down, went back up, came down, and then we went way up, and it was pretty much all day till we came back down again. Let me copy this. We have a bounce here, and then we finally break through. And then what do? Once we break through that support, we come back to test it as a resistance. So now previous support now turns resistance, and you can tell because we have a bounce here, and a bounce here. So support turns resistance once it's broken, and resistance turns support typically once it's broken. So learning to read market structure is very important, and it's very key, especially on the higher time frames. Number 4, learn to trade patterns. Learning to trade patterns. When you learn to read candlesticks, multiple candlesticks form certain patterns, which is what most day traders trade. There are lots of profitable patterns in the market, and if you learn how to read and trade patterns, you can be very profitable. Now, I am primarily a breakout trader. I trade mostly gaps, but I also trade some double tops, double bottoms, and some wedges. If you're looking for a pattern, right here was a breakout. See this top and tail here and this top and tail here? Over these top and tails, there was a breakout right here, and this is what I primarily trade. Now, I may or may not have traded this particular setup, but this is known as a breakout because it's breaking the high of this candle, and it's breaking the high of this candle. And this green candle here breaks out. I also trade double bottoms, which we'll talk about in the later videos, and double tops. So if I copy this, there's a bottom here. We came up, and a retest right here. And if you're not seeing it, I'll zoom in and I'll draw a line. So we come up from support, bounce here, right? We come down. Here's our first bottom right here at this yellow arrow. Then we come up, come back down and retest the previous low, which creates a double bottom because we don't break through it. And then we go up. So this is what's known as a double bottom. Right here, we have a double top. We have a top here, and we have a lower top here. And because we don't break, because this second top doesn't break this top, this is known as a double top. So this is something that I trade as well. And you could actually trade it right there short if you wanted to. So learning to read patterns and finding which patterns suit your trading style and your personality is the fourth thing you need to learn to be a successful trader. And as we continue with this how-to series, I will talk in much greater detail about each one of these. Number 5, find a mentor. Finding a mentor in this business is crucial. Find somebody that you can mirror, somebody that you like their personality and their trading style that you can learn from, somebody with a teacher's heart that can show you how they trade, explain why they trade the way they trade, and the style that makes sense for you. Over the years, I have tried trading many different styles. I've tried trading reversals on support and resistance areas. I've tried trading advanced patterns in the Forex market where the market was going sideways. I've tried different things by themselves. I've tried scalp plays and 20 period moving average bounces. And what I found out was some of those didn't fit my personality. It was counterintuitive to what I thought the market would do, and I was always hesitant. I remember one of the major things I've struggled with is trading retracements. I would wait for the stock to come up like it was doing here and then retrace. And I knew that when it got to about 60% of the initial impulse leg, I should be buying. And my fear with that was because this huge move down, I was always hesitant on buying because I was afraid it was going to continue going lower until it was too late. So I was always very, very late getting in. And that took some time to figure out what my style of trading is. So now I trade primarily breakouts and gaps, which fits my personality very well. So once you find a mentor, learn what their trading style is, see if it synergizes with your personality, if you enjoy trading it, and follow them. Number 6 is open a trading account. Open a trading account and paper trade it. So once you've learned to read candlesticks, you've learned how to determine if we're bearish or bullish, you've learned how to place support and resistance lines and how to read market structure, then you've found which patterns you like trading. There are lots of patterns, and you have to find the ones that make sense. And I would say the simpler the better. No pattern works 100% of the time, but there are lots of patterns that'll make you money. So once you found your pattern and found a mentor, somebody that their trading style makes sense to you, open your trading account and trade it with paper. Now, I use TD Ameritrade, and when I opened my account, their requirement was $2,500. So I'm not sure what it is now. There are other brokers that their minimum requirement is $500. Some are more, some are less. Find a broker that you like. TD Ameritrade is just what I use. I'm not recommending it. It's just what I've been using and I've kind of stuck to it. So once you meet their requirement, their funding requirement, you can actually ask them for a paper trading account or a demo account, and they will let you use it for free as long as you like, as long as the account's open. So fund the account, use paper trade, and as you're following your mentor and trading the patterns they trade, I highly recommend trading with paper money, a fake currency, until you learn to be successful and profitable. And number 7 is help others. Help others. That's it. Once you've mastered these 6 steps, the 7th one is help others get started. Whether it be, one of your friends or somebody you know, or somebody is just looking for help in the comment section, or just being a part of a community, which is what my goal on this channel is. My goal is to create a community of like-minded individuals so we can all share ideas and we can learn from each other and help each other out and hopefully take similar trades. So there you have it. That's it for the first video. Those are the 6 key steps that you need to learn. Now, in the next how-to video, I'm going to talk about learning to read candlesticks, we'll go a little bit more in depth and we'll discuss that. And then in the second how-to video, we're going to talk about step number 2, which is learning how to read market direction. I'm hoping that this series will help you out, find a place to get started, as well as will teach you how to do each one of those things step by step. If you found this information helpful, please hit that like button. It'll help the channel grow as well as reach more people and hopefully help them on their trading journey. My goal here is to build a community of like-minded individuals that create a positive atmosphere where we can share trading ideas. Thank you so much for watching. I'll see you in my next video.